Hello, and welcome back to the topic, the balance sheet basics and accounting equation. What is a balance sheet? A balance sheet is a financial statement that gives a snapshot of A. What a company owns and what it owes. B. Certain key facts about a business as of a particular date. Why would you call it a snapshot? A snapshot captures a particular moment in time, unlike a video which captures an entire period of time. In that sense, balance sheet is a snapshot because it gives a picture of what a company owns and what it owes at a particular point in time. Note the two words I have used, own and owe. Although there is just a difference of a letter in the spelling of these two words, they mean two entirely different things. Now let's look at them. What does a person own? A car, a house, investment in shares, real estate, bank balance, etc. And what does a person owe? A loan, credit card payments, some money a person borrowed from a friend or relative. Similarly, a business owns buildings, machinery, land, computer, etc. The buildings, machinery, land, and computers that a company or a business owns are called assets. Now, where does a business get the money to buy all these assets? Some part of the money comes from the owners of the business, while some comes from the money borrowed to buy these assets. The owner's money is called equity, while the borrowed money is called liability. In essence, the money that the business gets to buy the assets is what it owes. This brings us to the equation what a business owns equals what it owes. Or, in other words, assets, i.e., what a business owns equals liabilities plus owner's equity, i.e., what a business owes. Now, some of you may wonder, why does a business owe owner's equity? This is because the business is a separate entity from the owner. The business entity concept in accounting requires all entities to be accounted for separately. In other words, businesses, related businesses, and the owners should be accounted for separately. That is why business is a separate entity from the owner as far as accounting is concerned. Does that make sense? Okay. Now, let's look at some numbers. Tom started a business of sewing and selling fashionable hats. He had $200 of savings, and his Aunt Polly lent him another $300. So with that money, he started off by buying a sewing machine for $500. Do we see an accounting equation here? Yes. Assets, i.e. sewing machine, equals $500. Owner's equity, i.e. Tom's savings, equals $200. Liabilities, i.e. borrowings from Aunt Polly, equals $300. That brings us to the accounting equation assets equals liabilities plus owner's equity, i.e. $500 equals $300 plus $200. Did you notice that I have used balance sheet equation here instead of accounting equation? Well, they both are the same. You can use either of the two phrases. Did you also notice that the left hand side always equals the right hand side? That's how the balance sheet got its name. Now let's look at another example. Suppose a business reports $2.5 million in total assets and the total amount of liabilities of the business is $1 million. What would the total amount of owner's equity in the business be? Take your time. I can give you a hint. Use the accounting equation assets equals liabilities plus owner's equity. Plug in the figures that you have and find out the missing figure. Alright, let's look at the answer. The answer is, according to the accounting equation, $2.5 million of assets equals $1 million of liabilities plus how much of owner's equity? Owner's equity therefore equals $2.5 million of assets minus $1 million of liabilities. So we got the answer. The answer is the owner's equity is $1.5 million. What did you learn from this video? We learned what a balance sheet is. We learned what assets, liabilities, and equity are. We learned about the accounting equation. And we learned to solve some problems based on accounting equation. I hope this video has clarified the balance sheet basics for you. Now you can go on and attempt the first quiz on review of financial statements and balance sheet basics. Once you finish the quiz, go to the next video on the detailed classification of assets and liabilities.